And I go to the news that John Miller of Miller Samuel had this week on Queens. For those of you worldwide, Queens is to the east of Manhattan about 4,000 miles. And the real estate there is up 10%. A starter condo is $700,000. Are we all going to rent?
Not indefinitely, but you've certainly seen a big shift in terms of how we're living. The homeownership rate is down back to where we were in the late 80s, early 90s. And the adjustment in the homeownership rate has been particularly acute for the younger generation. And that could be partly cyclical. This was a tough business cycle.
Agreed. But you're saying it's more than that.
I think it's more than that. I do. I think there's also a secular shift where you're getting married later, having children later, and there's a greater tendency, a great desire to live closer to urban centers.
But within the urban centers, and I love that part of your research, within the urban centers, there's the idea everybody wants to live in the same corner in Brookline and have, artisanal this and artisanal that. That can't happen. How do they manage the cash flows required as an owner or even as a renter? I don't get it.
Yeah, I think that's obviously one of the challenges, and that's why I think given how fast rents have been increasing, and given even home price appreciation relative to fair valuation, I would argue the market looks a bit tight. So I think it's an opportunity for more building, targeted building in certain urban centers and even within the surrounding neighborhoods.
Given these secular changes that you're talking about, are we burdened with the wrong kind of housing stock?
We have been, and that's what this crisis has been about. It's about, adjusting the housing stocks. You had a great amount of single-family building during the bubble period. That's where all the excess was, and a lot of that excess were in areas that were really just speculative neighborhoods.
Too big, too remote, stuck on the end of the cul-de-sac.
Yeah, and those prices have adjusted significantly, and they're now in the hands of somebody else, or some of them have been demolished.
Well, to McDonald's, we called them McMansions, Brendan. The front hallways were bigger than yours in my first 10
I have to say, I know that phrase. That phrase has always bothered me because
it's true, though.
I know this, but it says that there's something wrong with that aspiration. But the aspirations, you're saying, have changed.
And I think what's changed is also just the timing that people aspire to be homeowners. If you look at surveys, it still says that people want to buy, but it happens later in life.
$700,000 in Queens, and it can be San Francisco, it can be Houston, it doesn't matter. $700,000 is I need $140,000 minimum to get into it. I've got a $4,000 or $5,000 nut every month, plus the fees on top of that. The percentage of America that can grasp that is next to nothing.
I mean, that's the issue. I think in general what we've seen is constraints on budgets from the high price of shelter. And you can just kind of see it in the macro sense. Look at CPI. What's the component within CPI that's been driving up the headline? It's shelters, owner's equivalent rent, and tenants' rents.
We were curious. I was looking at this trend towards smaller houses that's full of anecdotal evidence about what people want. And Housing and Urban Development has some data that actually shows that consistently over the last 50 years, houses are getting bigger. That was not stopped during the downturn.
No.
House sizes are slowly growing.
Yeah, it's incredible. We actually reached a new record high for single-family homes in terms of square footage after the crisis.
I did not know that.
But the reason for that is really a sample bias. If you think about who builders were building for, they were building for those that can access housing, which were higher income, higher credit individuals.
So
go ahead, Brendan.
When that works itself out, are house sizes going to get smaller?
I think they should. I think there will be a downsizing.
Okay.
I want to ask both of you, from your two different views, an important question. I look at the Sunday New York Times, and the minimum unit in there is $4 million. That's got to be the upper 10th of 1% of the American public. Within your research, is the idiocy of New York beginning to trickle out across America?
Yeah, it is. It's still in pockets because, as to your point, there's a limited number of people who can actually afford that and can buy that. So I think overall, when you think about a longer-term perspective for home prices, given how fast the recovery has been post-crisis in terms of home price appreciation, not building, but home price appreciation, I think when you take a 5-year, 10-year perspective, you should be seeing leveling off in home prices.
Why is the Case-Shiller number for New York so single-digit when we're all talking about a double-digit Queens?
Because we're looking at a very narrow part of New York, which is Manhattan and the boroughs. The New York number in Case-Shiller is the metropolitan area. It's the MSA. So that's taking into account parts of Long Island, parts of New Jersey.
Brendan, squeeze in one more question.
I was just going to say, I'm certain that the Case-Shiller in Great Neck, where I live, is in the triple digits. I'm sure that's. what we're looking at. You know, is it one of the things that you read is that what's driving up house prices in New York, a couple of other American cities, Seattle, parts of L.A., is foreign buyers. Is that a cheap, easy political excuse?
I kind of think it is, actually. I mean, if you look at from the National Association of Realtors, their survey of international buyers, in parts of the country, it's huge. So in certain regions within San Francisco and certain regions within New York City, it's a big part. Parts of Arizona and parts of Florida as well, and Texas. Okay. Those are the big markets that have foreign buyers. But if you look at overall for the U.S., it's a small fraction.